Test, test, test. Hi all and welcome. Welcome to another edition of midday webinar, What's Moving the Markets by FxPro, delivered by myself. My name is Phillip Konchar. I'll be your host for today. I'm not really sure what you can actually see at the moment, so I'll need your help, guys. I'll just wait for a few more people to come in and join us before I go into into my normal routine and start talking about the markets and getting all excited and that kind of stuff. But I have a camera. I have a camera plugged in as well, so hopefully you can see me as well as the big kind of FxPro logo and a disclaimer a little bit later as well. So just if you can tell me what you see, that'll be amazing. Any of you, and that'll really help. If you can't see the camera, then I'll switch it off because I don't want to be wasting CPU on this particular machine just for the sake of a camera. Yes, Wikesh, thank you so much. Thank you so much. Okay, so excellent, excellent. Hi, AJ, Alberto, Danny, Flush, Grace, Graham, Niall, Ronald, Vikesh, Fahil, anybody? Yeah, so you can see both of them, yeah? Okay, right. I'll start talking about the economic data first, and then we can go into the actual charts and cover what's happening with the financial markets that could be of interest to you for today. I won't be concentrating too much for the rest of the week because today could be a very nice day for anybody who's trading anything relating to US dollar, including US equity indices, and I'll cover that in a bit, and also crude oil. So that would be Brent and WTI, but also some commodity currencies like CAD, for example. Dollar CAD would be an interesting thing to keep an eye on today. Excellent. So what I'll do is I will just start with these slides first. So welcome to FxPro webinar. The topic of this webinar is what's moving the markets, and my name is Phillip Konchar. I am a CEO of a company called TraderCast, and we're working very closely with FxPro. And if you have a live trading account with FxPro, you are able to access TraderCast for 30 days completely free of charge. Otherwise, it's membership based. So come in and see if it's helpful for you. We do daily broadcasts. Apart from that, that's the kind of who I am. And if you need to get in touch with me, that's my email address. And you can speak to your account manager at FxPro. Sorry, I have my squawk on as well. If anything comes in as a breaking news, it'll come up on the news there as well. Okay. For legal purposes, if you've seen any of these webinars before, you pretty much know that. So you can definitely see the screen with FxPro slides. That's what I'm trying to say, because I can't really see what you see. That's the tricky bit here. Let me see. Yeah, I think you can see. Excellent. Okay. If you've seen any of these webinars before done by anybody else, any of the brokers, you know they all start with the big disclaimer. So basically, FxPro are execution-only brokerage. They're not advisory. So anything that we discuss here is available in the public domain. obviously you know that leveraged forex trading, CFDs, spread betting carries a huge amount of risk, and obviously you need to kind of be aware of that. You need to understand the way the leverage works and the way how these OTC markets function. So anything that we talk about is available in the public domain. It's of analytical nature. It should not be seen as advice for your trading or investment. So basically, we do not take your personal circumstances in consideration. And we don't know your objectives. But I'll go into the live markets and talk about some specific stuff that could be of interest to you: prevailing trends, financial instruments which are quite liquid and frequently traded, and also the economic calendar, i.e. the data that will drive these markets today. And then we'll find out some levels for support and resistance, maybe look at some price patterns which are developing or being confirmed, and then possibly leave you with something that you can find useful and usable. I'll probably have to say hi to quite a few people. Andreas, Danny, anybody else that Isaac, Niall or Neil, Patrick. Anyway, if I missed anybody, apologies, guys, and feel free, ask questions, come into the chat section. We should keep this session very informal as well. So this is my slide. That's what I look like. These are just my opinions and experiences, not advice. But you can see me on the camera already. So hopefully that all makes sense. The last couple of slides that we have here, and then we go into the economic calendar, and then we'll go into the live markets, are these golden rules. So I'm recognizing some names because we only started with this FxPro webinars series a couple of weeks ago, I suppose, maybe 3 weeks ago. And these happen on regular basis every Wednesday at 12:30. Obviously, in TraderCast, we do them twice daily for about 4 hours in the morning and in the afternoon. This is only about an hour worth of webinar, but hopefully it's helping you with your analysis and with your market overview. So I'm recognizing some names. People are coming back, so obviously I can assume that you like it, but some of you have seen these golden rules. I'm going to go through them very, very quickly. Golden rules for new traders, and maybe a good refresher for us all traders. Rule number 1, never add to a losing trade. Rule number 1, never lose more than 1% of your trading capital at any one time. So basically, you would predefine the acceptable amount of risk that you're willing to carry to prove yourself right before you enter into any position. And that's the only thing that you can control. Will the position play out? Patrick, like it. Excellent, thank you. Patrick, I think you are using TraderCast as well. Anyway, will the position play out in your favor or not? We don't really know, but the only thing that we know is how much risk am I willing to take in order to get into this position, and I'll talk about risk to reward a little bit later. But that's 100% in your control. Markets are random. They can have a random outcome to any kind of trade that you have set up as well. Never trade anything that you don't understand 100% of the time. I came across a bunch of people recently and they started saying, oh, Bitcoin, and so on. They started chasing the Bitcoin and cryptocurrencies when they're at the peak. They came in too late. They didn't understand what it is. I didn't trade it. I don't know what it is. So I'm staying away from it. I understand Forex. I understand commodities. I understand indices, equities, so that's what I trade. So basically what I'm saying is make sure you understand what you trade, how it moves, what triggers it, the economic data that's fundamentally supporting it and impacting it, geopolitical events that might impact it, and so on and so on. And then once you know what it is and how it works, what the margin is, what the spread is, and so on, then you go and trade it. Look for some kind of confirmation there that you might find suitable. Trade in the direction of the trend in your trading time frame. Make sure that you follow the trend rather than trade against the trend. That's what I'm trying to say there. Only look for low risk, high reward trades, or high probability setups. When you don't have signals, don't trade. You can be short, long, and cash. Cash is a position as well. You don't have to be in the market 100% of the time. If you don't get setups, don't trade. But basically, try and find some kind of trading setups or opportunities which are giving you a disproportionate amount of reward, potential reward, for the definite amount of risk that you're willing to take. So that brings us back to the kind of a risk to reward ratio, and never risk more than X percentage of your capital on any one trade. Trade your plan, your system, your signals, the chart, and price action. So basically trade what you see, not your opinions, bias, and predictions. We all have firm belief that markets should do something, central banks will do something, the particular market and instrument will react in a specific way, and eventually we could be right, or maybe we could be right straight away, but markets can stay irrational for much longer than anybody else can stay solvent. So make sure that you trade what you see, the trigger confirmation that you see, economic data that you hear, rather than what you believe will happen. Don't front run things. Find a trading methodology that fits your personality. This is a hugely important one. I keep talking about this over and over again. So basically, if you have, if you're working 9 to 5, if you're busy, if you're away from the screens, don't trade intraday using your phone. It doesn't necessarily mean that that's increasing the probabilities of you potentially being right. Go to a larger time frame, do a swing type trades, trend following, end of day type trading, and so on, using orders and things like that. If you are able to cope with volatility, you understand how markets work, you want to be actively engaged with your trades and actively manage them more frequently, then yes, end of day would be boring for you. You will be sitting on your hands for weeks before you get a trade. Maybe intraday would be better. So understand who you are, how you work, your preferences and ability to trade, and then trade with something that's suitable for you. Maybe have a combination of few, but that's what it is. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. Hugely important. You must write it down. Say, my name is so-and-so. I trade euro dollar, dollar yen, and cable. Why? Because they're three most liquid currency pairs. I understand what's moving that market. US dollar, Federal Reserve. And I trade in X time frame, and my trend is confirmed by these two time frames, and I trade in a direction of the trend, and I only risk X percentage of my account, and the reason for my trade is when I see price pattern developing, or a candlestick formation, or some. So you must define it, and then when that happens, then you have the reason to follow your plan. You know, in that case, you will put your stop loss at a specific place. You're expecting to get your disproportionate amount of return, potential return, for a definite amount of risk that you're willing to take, and so on and so on. So that's the kind of reason behind it. You must have your plan, and then if you get bored, look at the chart, something's happening, and then you click on a chart and you place a trade. Give yourself a slap because you placed a trade because you were bored, not because you followed your plan. Okay. The size of your winning and losing trades determines your trading success. This is self-explanatory. Make sure that you cut your losing trades very quickly. Lose often and very little, but let your winning trades run. That's what I'm trying to say there. The risk management rules will determine the success of your technical trading system. Okay, loads of people come to the trading and they say, oh, I came across this wonderful strategy, especially online, Instagram, and you know, social media. There is this guy on Twitter, he keeps tweeting about these trades. He's amazing and so on. And the hit rate is 80%, so 80% right. Yeah, but if you do not accompany that with appropriate risk management, it'll still impact your overall return very, very quickly. Because if you are right 8 out of 10 times and you win £10 every time you win, so you win £10, £20, £10, £20, £10, £20, something like that. But when you lose, when you're wrong, that 20% of the time you lose couple of £100 each time, it'll just eat into your profit, and you'll go into a negative a balance from the P&L point of view at the end of it. So you must have a very structured and appropriate risk to reward and money management system as well. So a couple of things to work with. Obviously, it's your technical trading, understanding of the market, fundamentals, sentiment, and then your mind, your psychology. What makes me trigger? What makes me do certain things? Do I feel fearful? Am I worried about this position? Is it too big for me to cope with? And so on and so on, and things like that. How much size of one trade if I am starting with $100? Arshad is saying very little. What is the best method of binary option trade? What I'm talking about here, this is spread betting and CFDs and forex trading rather than binary. So I'm not familiar with binary options. I don't think that's probably the best way to trade. And if you have 100 quid in your account, really what you can trade with is maybe 1 cent, 2 cent per point. It's very, very little. You might use this to practice in some way. So it's probably not possible for you to trade with 100 quid, but that's me. Tell me percentage, sir. Percentage. If I have $500, how do I calculate 1% of it? Wow, that's a good question. Now, so this is proving to be a bit of an educational session rather than market analysis. So I'll use the £10,000 and work out the okay. Do you just jump in after some economic news releases? Do you think if markets sense, or is it better to be wait? Okay, yeah, all very good. What I'll do is I'll go and remove this now and go into the markets, and I'll show you the way I would now analyze the markets and so in the case if you need to contact FxPro, this is the UK number and the Cyprus number. Feel free to contact your account manager and inquire about this. This webinar will be recorded and posted on YouTube as well. Okay, now let me just remove this and I'll go back to the disclaimer a little bit later towards the end. So hopefully what you're seeing here is you're seeing MT4 charts with multiple markets. This is euro dollar, this is sterling dollar, this is dollar yen, euro sterling, Aussie dollar, dollar CAD, FTSE 100, gold and oil. This is S&P, Dow Jones and DAX, German 30. Now, so just to answer your question very, very quickly, your position size is calculated based on your entry price and where your stop loss is. So if you have, for the ease of calculation, you can do this with any amount. If you have £10,000 in your account and you're willing to risk 1% on a particular trade, basically you're risking 100 quid. £100 is your risk exposure. Now, if you place a trade and let's say you're trading a currency pair of some sort and you entered at X and your stop loss is 100 points below that entry price, then what you would do is you would divide your monetary exposure, which is £100, by 100 point stop loss to give you the answer of your position size, which is in your case £1 per point. If you're trading in lots, it's 0.1 of a lot, and so on and so on. Now, if you trade, let's say, FTSE 100 and you entered into a FTSE trade, FTSE with 100 point stop loss, it's a large stop loss. FTSE for a swing type trader or intraday trader, normally people might find appropriate stop loss is 50 points below and so on for a swing type trading. So if you enter at X and your stop loss is 50 points below where you entered, or above where you entered if you're shorting, and you're willing to risk that 1% and you have 10,000 in your account, so you divide your 100 quid by 50 point stop loss, that gives you £2 per point if you're spread betting, or 2 mini contracts if you're trading CFDs, or 0.2 of a lot if you're trading Forex. Now, if you do the same thing and you trade S&P, for example, and S&P moves 10 points, 15 points on a busy day, not now with volatility, but on a busy day, and you trade and you place a trade on S&P, and your stop loss is 10 points below, you would divide your 100 quid by 10 points. That gives you £10 per point. That's how it works. You're still risking 100 quid. Your stop losses are 10, 50, or 100. Therefore, your position size reduces or increases by the decrease in your stop loss distance from your entry level. So that's how it works. Is this all helpful? I don't want to be doing education here. I should be talking about markets. Markets are getting ready to pounce. Okay. I'm sensing that some of you guys are very, very new. If you want to learn, you're more than welcome. Coming to TraderCast, and if you have FxPro live account, you might qualify for a 30 days free access. I'll show you. You can register, put FxPro in the introducer field, and your account will be activated, but only if you have a live account and if these guys tell me that I can. If you don't, it's a membership based. You have two weeks to try it. So we would love to welcome you in our community anyway. So let's go and do this very, very quickly. The important bits to talk about today are the economic calendars, economic calendar for today, and there's a couple of things that we need to cover. Okay, first thing, you have a very good daily analysis on this website. It's called blog.fxpro, or type in Google FxPro blog, and that would bring it. You have plenty of daily analysis here, and it's completely free to access. Now, I'm going to remove this for now, and I'll talk to you about the economic calendar. The other thing, while I have you all on, there is a really, really exciting event happening this weekend in London. So, 17th and 18th of February in London. If you wish to come and join us, I have a small slot. I'll be talking on Sunday as well, but I'll be there all day Saturday as well. There's a bunch of different traders, educators, people who are talking about algos. I'll be talking about the markets in general. You can register here, so you can go to FxPro landing page, apologies, and this banner will come up, and if you want to join us, you can. It's basically Saturday 17th and Sunday the 18th, from I don't know, about 9:30 until about 4:30 in the afternoon. You can come and join us. You're more than welcome to. It would be lovely to see some of you in person. If you do attend, make sure that you come and say hi, and you say, "Oh, I've watched your webinar, and I'm so and so." It would be lovely to meet you in person. It would be lovely to meet you in person. Now, the other thing that I want to talk about is trading tools. Go to the economic calendar, and this is what I want to talk about today. Wow, I have a couple of questions. Sorry. So let me just go and do this quickly. This is the economic calendar for today, for Wednesday. This is what happened this morning. We got European GDP data, which came in at 2.7%, in line with expectations. Euro dollar didn't move that much. So European equities kind of didn't do too much on that data. I think market is expecting something that's coming up in about half an hour time, and that's a US consumer price index, which is basically the indication of inflation expectations in US and also retail sales. So sorry, I'll just talk about this in a minute. I'm going to go back to the chat room and see what's going on. So a few questions. B saying, do you jump into the trade before the event and so on, but gives you follow to release as well? Thank you, B. Okay, well, hopefully I'll be able to explain this as well. Now, Thank you for your question. Thank you for your question, B. So the big data is coming in. Obviously, the consumer price index will be driving the markets for this afternoon, and the reason why that's happening is this is closely watched by market participants because we believe that this figure will potentially impact Fed's decision to either hike rates or maybe postpone their rates, because basically that's the inflation as well. So the expectations are that the inflation will stay at 1.7. The previous reading was 1.8 on kind of year-to-year annual basis, and this is the reading for January. So if inflation comes in higher than what's being forecasted, that'll indicate that Fed might become a little bit more hawkish, and therefore this will cause a dollar to strengthen, so dollar index to strengthen, and I'll talk about it in a minute. And then that might have a negative impact on euro dollar and sterling dollar, positive impact on dollar yen, positive impact on dollar CAD, and so on and so on. Also, because commodities are traded in dollar as well, so gold might react very quickly, and so on and so on. So the way to kind of trade this is, if you're trading intraday, the rule is you have to have everything closed ahead of this number, at least 15 minutes before, wait for the number to come up, and then if that number causes a breakout in the direction of the prevailing trend, then you're looking to trade in the direction of the trend in your time frame. If the data causes a trend to reverse in your trend, then you are looking to either trade in the opposite direction or wait for another retest of some other deeper support level in a direction of the trend. So that's how intraday traders, how scalpers would trade it. Swing type traders would assess it from the macro point of view, and they'll say, I'm trading in 4-hourly time frame or end of day time frame, so therefore I'll wait to see how this comes up, and then I'll read the candle at 12 o'clock in the afternoon, 4 o'clock in the afternoon, 8 o'clock at night, or in the end of day at 9 o'clock when markets are closed, and then I'll make my decision to either close my profitable positions, readjust the stops, and so on and so on, or add to my position if I see some sort of breakout or a reversal and so on. So that's how people tend to trade it from the two different time frames as well. Yeah, we did talk about that you know, sometimes happens, you know, markets can sell off on a good news and markets can rally on the bad news and so on. But anyway, the other thing that I want to talk to you about as well for today, and I really want to go into the markets, is we have crude oil inventories, and that's coming up at 3:30 in the afternoon. Now, yesterday, if
coming out of the US, there were shots fired outside the NSA headquarters in Maryland, that's the National Security Agency headquarters. Some reports of multiple victims.
Multiple victims in US.
Be aware of the situation. We are keeping an eye on it as it unfolds.
Okay, so there is we don't know what this is and how the markets might react to this. This is nothing to do with the economic data releases. Currently, markets are not reacting much. S&P is not doing much. Dow Jones is not doing much, ignoring this news. So we don't know if this is terror related or if this is something else. But you've just heard there's some shots fired in US in front of a specific government agency as well. What is the best time to trade and what is bad time to trade? Yet again, Asad, without really knowing you in person, and what you trade, I don't really know. If you're trading in a general rule, if you're trading European equity indices, this is turning into an educational event rather than
on the situation in the US outside the NSA.
Market analysis.
It is an ongoing situation, and we're keeping an eye on it. We'll only give further updates if it becomes a market factor, given the US data that is released at the bottom of the hour.
Okay, I'll overrun
a US CPI and retail sales preview on the newsfeed. Do take a look if you want an in-depth briefing. Have a look.
I'll overrun today's webinar probably because we'll go into the news and see how it reacts. But anyway, so if you're trading European equities, if you're trading something that's liquid in the morning, if you're UK based, you're probably trading between 7:30 in the morning and until about 11 from the intraday point of view, because that's when European equities become kind of quite liquid and they tend to move, news come out and so on. And then majority of the people step away from 11 until about 1:30. That's when US markets open. So if you're trading Dow Jones, S&P, if you're trading US dollar, kind of heavy stuff, then people tend to trade from 1:30 until about 4:30 in the afternoon, and that's when European markets close, and then they'll walk away because that's lunchtime in US, and then they will come back between 8 and 9 o'clock at night for that one last hour of trading before the US markets close. Unless you're trading Asian markets, then you're busy from 5 o'clock, 3 o'clock in the morning until about 7 o'clock. I don't know what you do. I don't know what you trade. I don't know what your trading style is. So it's difficult for me to tell you exactly what time is the best. I know what works for me. I know what works for somebody else who tells me I trade FTSE. So if you trade FTSE, don't trade it at 8 o'clock at night because it's closed. You trade FTSE in the morning when it's open. Okay. Now, so let's do this. Let's do this quickly. Sorry. See you in Tradercast at some day. Sorry, need to leave. Patrick, yeah, okay, good. Now, let's go and talk about markets, guys. Yesterday we got API data. I'm going back to the economic calendar again very, very quickly because I think we need to finish this off. If you're trading crude oil, if you're trading WTI Brent, and if you're trading dollar CAD, it's very likely that volatility will be impacted by 3:30 news release, which is giving us how much oil is in the stock, in storage for the past 7 days. And expectations are that we will get about 2.8 million barrels in storage. The previous reading was 1.8 last week, but yesterday we got API data. 1095. We got API data at night, and API data is storage for crude, and expectations are that will show a drawdown, basically a demand for oil of 1 million barrels. But that report came in showing 3.9 million barrels of oil in storage, much larger build than 2.7. And this, so some people are using this as a forecasting tool for what might happen today at 3:30. So from the supply and demand point of view, if we get a larger build, oversupply of oil to the market, and increase in production, that might put additional pressure on crude oil prices and also impact commodity currencies, in particular Canadian dollar, because they're linked with crude oil. Same thing with Brent. So keep an eye on this. 3:30 today, crude oil, really, really important level to watch. Now, let's go into the markets and cover a few things. Guys, let's keep this informal. Ask as many questions as you can. Please, honestly, ask. Don't wait for me to prompt you. It really helps me when I'm talking about this as well. Okay, so the first thing that I want to talk to you about is dollar index. Guys, this is very, very important financial market to watch. Dollar index is futures. It's traded as a futures, and it follows the movement of US dollar against the basket of 6 other currencies.
Just doing a quick spot check across the marketplace. So European bourses are trading higher across the board, as they have been through a bulk of.
Okay.
The Euro Stoxx 50 at 0.5.
I'll go into the dollar index now. So keep an eye on this. If dollar index breaks out higher, that normally impacts a dollar currency pairs crosses. This is a daily time frame. We are seeing selling pressure in dollar index for quite some time now, and the logical downside support is at these lows at 88.40 confirmed. Loss of that level would open up the way for the retest of deeper retracements towards 87.90, 87.40, 86.60. Now, from the intraday point of view, this is the 4-hourly time frame chart. This appears to be a double bottom here, and we saw a particular breakout above a falling resistance trend line. Falling resistance trend line, a number of them actually, a number of them. Double bottom, breakout, and then there is another one here and a breakout as well. So guys who are trading this price pattern and who are sitting in a bullish camp, they were looking at this area here, which is known as a neckline for this double bottom, to play out. And what they did is they took this many points from the low to the high and extended it up on the breakout level, and this is where they started taking profits. This area is also very important because here we have a fib retracement of 50% as well. So nicely tying in with a couple of reasons why they started taking profits at that level as well. So where to from now? This is really important bit, guys. dollar index will likely react to inflation data that we are going to get at 1:30. Sorry, let me just. Now, if that happens, we should be watching at a couple of different levels. This is the first one, and this will potentially develop a falling wedge pattern, which is for us who know what the continuation price pattern is, would look for a breakout to the upside. As long as this level here holds, which is 89.40, and I'm going to change the color of that into blue so we know it's a support. So double bottom breakout, a retest of that breakout. If that happens and dollar index rallies and we see a spike higher, a retest of some sort like that, then potentially we could see a spike into this area here, which is 200 period moving average, and also a cluster of these previous highs. Now, more aggressive traders would be looking for an additional breakout and a continuation of dollar strength, assuming that Federal Reserve might react in a hawkish way because inflation is increasing, and they are more likely to hike more than 3 times, which is what market is anticipating. So this would be the bullish reaction for dollar index. And basically, the way this might be calculated or potentially projected as a target, traders who are looking for price patterns will take the distance of the previous consolidation and extend it up on the breakout level to get a potential level of interest, which brings them to these previous highs. So a couple of levels to watch from the upside point of view. We have these highs here at the resistance at 89.90, followed by 90.40, followed by 90.80. So that will be for dollar index. That will be for dollar index as a resistance to the upside. Alternative view is if inflation comes in much lower than expected, therefore market participants start believing that Federal Reserve might not be in a particular rush to hike rates, then something like this might happen, and then we could see a dip to retest these previous lows. So then keep an eye on 89.40, 88.90, followed by 88.40 to the downside. So these are the levels for dollar index, and this is the 4-hourly time frame. Now I can go into an hourly time frame and I can show you exactly the same thing. It's a falling wedge. This looks like a double top here, or a shoulder, head and shoulder with a neckline. A very, very important level to watch. This price action is waiting. It's waiting for this number to come in, and we could potentially see an increased volatility in this particular market at 1:30. Now I'm going to reduce this and translate this into dollar yen, and then I'll talk to you about maybe euro, dollar, gold, whatever else. Now this is dollar yen, guys. Dollar yen. Do you have any questions so far, or is this all okay? This is dollar yen. Dollar yen in end of day time frame is just ranging. It's going sideways. So because the actual dollar is weaker, as we saw in dollar index. If we see a bullish reaction in dollar index, then majority of the bullish traders who are looking for this downtrend to end would be keeping an eye on this kind of shaded area here at 107.80, 108. These would be the logical upside resistances for dollar yen. We can see that dollar yen is in a downtrend. This indicates a Japanese yen strength, because recently we saw a substantial sell-off in equity indices, and loads of traders started parking their money into safe haven, and Japanese yen is one of them. So keep an eye on dollar yen. We see the sequence of lower highs. This is downtrending in daily, 4-hourly, hourly. It's all downtrending. The initial supports to the downside are at 107.15, 107.16. Confirmed loss of that level would open up the way for the retest of 106.80, followed by 106.10, and then 106. That means continuous selling pressure. Now, if the CPI data comes in and we see a breakout, higher, so basically dollar strength and yen weakness, then what might happen is that the first level of resistance is up here at 107.80, 108. Only a substantial and confirmed breakout above that level, and yet again confirmation. We have a range of people here. I don't know, we have people who are trading in 1 minute, 5 minute, 15 minute scalping. We have people who are trading in end of day. We have new people, we have experienced people. So I don't know what your confirmation is, but if you get a confirmation in your chosen time frame based on your technical trading system above this area here, 107.80, 108, then bulls in control, potentially targeting further upside resistances towards 108.30, 108.56, and 108.80, 109. So this will be a bullish breakout higher. Bullish breakout higher. If you go down to a 15-minute time frame, you're seeing a very similar pattern developing here as well as the one that we saw in dollar index. You see this a coiling price action which resembles a falling wedge, and falling wedge tend to break out to the upside if they're seen in clearly defined uptrends, where this is not. This is downtrending market, so this would be a trend reversal if it happens. Okay, this would be a trend reversal if it happens, but keep an eye on that level. The initial support at 107.15, 107, followed by 106.80. Upside is initially capped by 107.80, followed by 108. Now, let's go and talk about something else, and this is a euro dollar very quickly as well. Very, very liquid market as well. And if we go into euro dollar and check this out in a daily time frame, this is nicely uptrending. We have clearly defined supports down here. We have clearly defined resistances. So from the intraday point of view, the downside support is at 122.95, 122.57. So if we see CPI data trigger dollar strength, then potentially we could see euro dollar pull back into this area here, which is signified by this rising trend line. It's also signified by 50 and 20 period moving averages converging. We also have 200 period moving average here. I can plot Bollinger Bands there. I can plot pivots. I can plot fibs. I know that plenty of different things is pointing to that level as a significant level of interest as the initial downside support. If that support holds and we see a breakout higher, then upside resistances are capped by 123.76, 124.25, followed by 125 on the upside. The alternative can also happen. We can see a breakout from the current levels and a breakout above these resistances. That would also be seen as a bullish development for the euro dollar. The alternative is if we see substantial dollar strength and we see a loss of that support, confirmed loss, subject to your confirmation, subject to your trading strategy and a technical system that works for you, that you tested over a long period of time, and which provided you with a predictable positive outcomes. I don't know what that is. I know what mine is. If this happens and we see a candle closing below that shaded area, below 122.47, then that would indicate that longer term bulls are waiting for a deeper retracement towards 122, 121.60, even 121.15, 121 for them to buy a euro dollar. Only a confirmed loss and daily loss below those levels could potentially target deeper retracement towards 121, which is then targeting this long-term, clearly embedded rising support trend line. Keep an eye on that. Very, very decent levels as well. And this is the hourly time frame. This is the hourly time frame. Yet again, coiling price action. You can see that energy is building. Energy is building. Market participants are waiting. They're waiting for a trigger. They're seeing this as inverse head and shoulder, head and shoulder with a neckline and a breakout. So intraday bulls are waiting to see if this breaks out to the upside, and so on and so on. Okay, a very, very important support area down here. Now, I think I have a question. Have another best method other than moving average? Absolutely, you can use absolutely anything. I use moving averages. Some people use MACD. Some people use Heikin-Ashi. Some people use pivots. Some people use Bollinger Bands. Some people use parabolic SAR. I have no idea what you trade. I would love to talk to you about all of this if you don't know what it is, but we have a very little time, and I'm trying to cater for absolutely everybody in this room. So keep an eye on that. These are the levels that could be of interest to you, and I'm just using moving averages, and I'm using stochastics and stuff like that, trend line horizontals, because I suppose that's familiar to most of the people, and when we are talking about it, it'll make sense for them, rather than completely bamboozling everybody with analysis that makes sense to only few, and it doesn't give value to everybody else. Now, cable, very quickly, guys, as well. Daily time frame, we saw this massive pullback in cable. Sterling weakness, Brexit uncertainty. Mark Carney came out, and he's a governor of Bank of England. He said, guys, don't be surprised. We could hike rates much quicker than everybody else anticipated, yet again, because of the inflation that we got. That's normally seen as bullish for sterling. Okay, bullish for sterling. But we saw a pullback. So daily time frame, we are seeing this breakout higher. The initial support in a daily time frame is at 138, followed by 137.60, 137.20. Upside is initially capped by 139.11. So if or when the CPI comes in at 1:30, then we could see a possible reaction. The reaction could be sequence of lower highs here, and this could be seen as a breakout and a move higher. If we see dollar weakness, if we see dollar strength, this will be negated very quickly, and we could see a pullback to test these supports down here. Okay, the bullish scenario, yet again, you have this, what appears to be a triangular shape. Price action is coiling, energy is building, and in about 14 minutes time, we'll see reaction, either something like that, and a breakout into this zone here, which is then 200 period moving average and a cluster of previous highs. So upside is capped by 139.11, 139.47, and ultimately by 1.40, because this is the round number. This is the round number, and traders like to remember round numbers as well. Okay, so keep an eye on this. Support at 138, capped by 139.11 to the upside. Yet again, subject to the data that's coming up in about 14 minutes time. I'm trying to cover quite a few things here, and hopefully this is all working for you guys. Now, this is gold. Gold in a daily time frame, it's nicely uptrending up until this point, and then we saw a pullback. This is still creating a higher low, so it's uptrending in daily. 4 hourly, it's uptrending as well. We have a sequence of lower highs here. Last time we had the webinar, we were looking at this flag and the bearishness that was developing. If I draw a trend line going this way, this appears to be a breakout. The initial resistance for gold is at 1335. Initial support for gold at the moment is at 1328. 1328 currently from the intraday point of view, which is a 200 period moving average in 4 hourly time frame, but it's also a significant cluster of the previous lows and highs. Now, if we see a substantial pullback and a loss of that level, then this rising trend line, which is currently supporting gold, and this should be blue, would be lost, and that would potentially open up the way for a deeper retracement, so therefore dollar strength, US dollar strength, gold weakness into this zone here, which is 1324, 1320 support area, which is the neckline of this double bottom here. Only a confirmed loss of 1320 would open up the way for the retest of deeper downside support toward this previous significant lows at 1310 followed by 1300. Bullish reaction would appear something like this. So we have a breakout, and these little patterns are lovely to trade. Oops, sorry, I didn't mean to do that. I meant to do this. if you see a breakout above here and then retest and then a spike higher. Intraday traders will take the distance of this previous consolidation to the current high, and they would extend it higher to look for a potential resistance area.
Getting the retail sales print for January.
I'm going to leave this news on.
CPI data.
The reason why this is important is you have FIB there as well of 61.8% as well.
For the year-on-year, Street looks for 1.9% against prior 2.1%. For the core year-on-year, Street looks for 1.7% against 1.8 prior.
Okay, guys. So
that was the month-on-month. CPI month-on-month seen at 0.3, rising from a prior revised 0.2, and the core month-on-month seen at 0.2. Retail sales month-on-month forecast is for 0.2% against prior 0.4. The control group seen at 0.4 versus 0.3 prior. Core retail sales meanwhile seen at 0.4, in line with the prior. Don't have a forecast for the ex-gas and autos measure. The prior was at 0.4.
I'll probably overrun this. I don't mind staying here, watching it, watching the actual reaction to the CPI.
Take some added importance after that NFP data we got earlier in the month, which showed wages rising much bigger than expected. There will be focus on the CPI data to see if that trend is confirmed in the CPI data.
15-minute chart of gold.
Some desks paying extra attention to the retail sales number as well.
Continuation, continuation, another continuation, continuation, breakout, falling wedge, breakout, symmetrical triangle, breakout. They keep on happening over and over and over again. Eventually, they come into some strong resistance or test some strong support, and then a longer-term prevailing trend, daily, 4-hourly, kicks in, and then you get a daily candle forming, 4-hourly candle forming, and so on and so on. So this intraday price becomes noise, but it's normally triggered by something that's driven from the economic data point of view. Okay, so that's gold, guys. Do you want me to cover anything very, very quickly while I'm talking about this? So this is Dow Jones. Dow Jones, Wall Street, Dow Jones. It's a US 30. You would know it as US 30 if you're spread betting and trading CFDs or trading margin forex contracts. This is the index that has 30 large companies in US, and it's quite likely that it might become volatile as well. Can you cover DAX? Absolutely, yes. I would love to cover DAX as well. DAX is not going to be driven too much by US CPI data. It was supposed to be driven by European data that came in this morning, but I can definitely talk about it in a minute. But I do want to cover Dow Jones, guys. Dow Jones, oops, sorry, wrong mouse. Dow Jones, we have, can you still see the camera? Can you still see the screen? That's the important because I can't really see what you can see exactly. I think you can see the chart for Dow. You're all very quiet. Come and talk to me, guys. Come and talk to me. Now, what we are seeing here, guys, we are seeing this fairly substantial selling pressure, and the price came down, created this daily hammer, and then reversed higher. So all of this is currently coming to a very interesting level, because from the daily point of view, you have rising trend line and the price action is below that rising trend line. You also have daily falling resistance trend lines, and they're both pointing to the same or similar area, this shaded area here. So if the price creates this lower highs, that means that bears are still in control. If the price breaks through this area here, which is 24,890, 24,955, then bulls might be in control, and potentially we could see a spike higher towards 25,000, 25,200 to test those levels as a logical upside resistances. Now, from the intraday point of view, going down to an hourly time frame, this shaded area is hugely important for anybody who's trading Dow Jones today. This is where we closed yesterday. So when the US market participants come in, they'll see the gap. They'll see the price being higher than where it closed yesterday. The initial reaction when the US traders come in, they might try and push the price lower to that level to test it as a support. Or if the price stays above that gap level and have a positive reaction to CPI data, then keep an eye on this area here as a resistance. So if we go from the intraday point of view, if we didn't have a CPI data, if we didn't have data that might trigger everything at 1:30, at 2:30 when the US markets open, something like this could potentially be a scenario. Either a breakout into this zone and then a retest to test it from the opening to close the gap and then a move higher, or a loss of that level, a retest from underneath. Bears are in control, potentially targeting deeper retracements, 24,470, 24,170, and even lower. Now, the other alternative is this. If we see a reaction in this way, a pullback, close the gap, and then a rally from there.
Inventory levels are progressing in the right direction.
Something like this, into this zone here. So bulls would be hoping for this type of outcome, or the first version that we saw, challenging that 24,890, 24,900, 950. Sorry, a question. Excellent. Excellent. So keep an eye on this. This is a 15-minute price action for US 30 or Dow Jones. Okay, if you liked what we are doing here, we are doing it again next week, same time. Come and join us again. Tell your friends. Alternatively, as I said, you can go to TraderCast, register, sign up, and put FxPro in the introducing field. If you have a live account, you can have that'll take you to the payment stage. Don't leave your card details, log out, and if you qualify, and if these guys tell me that we can activate your account, you're more than welcome to come and join us. We do this twice daily, and there's a community. We're posting stuff in the community as well as analysis, and so we're looking for more people to join us. If you don't wish to do that, you're more than welcome to try us. It's a 2 weeks free trial as well. But anyway, I'm not here to promote TraderCast. This is FxPro. This is FxPro. What's moving the markets? Weekly webinar. Excellent. Now we have 3 minutes to the data. I'll try and do I'll do gold here, euro dollar, cable, dollar yen, dollar card, Aussie dollar. That'll all start flushing very quickly. Crude oil, S&P, that'll move as well. S&P will move very nicely. Very quickly, DAX, guys. DAX daily time frame, a really longer term time frame, appears to be bearish because we are below 200 period moving average. So that's the first thing to keep an eye on. We have a sequence of lower highs pointing to the upside resistance here in end of day time frame. From the intraday time frame, 4 hourly, we are seeing this developing, and this here is either a breakout, and if this is the breakout and this forms a really complex bull flag, then bulls could potentially return and try test this and do that towards this area here, 12,753. Resistance up here, 12,611.
Then the control group, and then the ex-autos gas, etc.
12,407. The initial downside is supported at the cluster of these lows at 12,187. Confirmed loss of that negates that bull flag, potentially opening up the way for the retest of these swing lows at 11,960. Now I'm going to stop with DAX and go back into this. Let's see. Come on. Let's see how this reacts.
Hi everybody, welcome to another one, another broadcast by City MBA.
10 seconds.
10 seconds to numbers, guys. 10 seconds to numbers. There we go.
2.1% for the headline, 2.1%, core 1.8, core month on month comes in at 0.3, month on month at 0.5, retail sales down 0.3, retail control 0%, core retail sales 0%, ex autos.
Very bearish reaction in equities.
The weekly earnings, real earnings month on month down 0.8.
Very, very bearish reaction. Very bearish reaction in equities, guys.
Recap.
Dollar strength.
At 2.1%.
Dollar strength.
Core 1.8 beats the 1.7.
Euro dollar under pressure. Cable under pressure.
0.3 against 0.2.
Aussie dollar under pressure.
Downward revision to 0.2.
Be very careful. The initial reaction can be faded as well.
Expected. Retail sales down 0.3. We were expecting up 0.2 there. The control group 0% against an expected 0.4. Core at 0% against an expected 0.4. And the ex autos and gas down 0.2 against a prior 0.4 for the real earnings, negative 0.8%, negative 0.8 against an expected decline of 0.3.
So retail sales came in. Retail sales.
Decent CPI report, poor retail sales report here.
Very poor retail sales report and very instant negative reaction in equity indices. You see this big massive drop in Dow Jones, guys, coming to this trend line. That gap that I was telling you about, yesterday's closing level, that shaded area, 24,654. So the gap is closed now. So where to from now is if we see initial pullback that holds, then bulls can possibly look for maybe a reversal from here higher. If we see a continuous selling pressure and a confirmed loss of that level, and something like this develops, then bears are in control, potentially targeting lower downside supports towards 24,320, 24,168, 24,100, 24,095 or thereabout. But the reaction is instant. The reaction is instant and very much visible. Very, very much visible straight away. Well, Alberto, you're more than welcome. Come and visit this webinars on regular basis. I'm pretty sure you can learn. Contact FxPro account managers. They will provide you with some educational content. If you want to try TraderCast, you're more than welcome. You'll find that very, very educational as well, highly educational actually. And you can watch this type of broadcasts. Market analysis on daily basis, and invest a little bit of time, and don't rush into the markets, because don't rush trading live without really understanding what's going on and how everything works. Here we go, guys. Gold is moving quite nicely as well. We had a very decent move lower in gold, so therefore loss of that rising support trend line, loss of initial support at 1328, and now we're into this support zone of 1324, 1320. Confirmed loss of this area would open up the way for the retest of 1310, and therefore you can see a very nice a strong reaction in dollar, euro dollar, strong reaction in cable, strong reaction in dollar yen, beautiful reaction in dollar yen, a breakout. Keep an eye on these areas here.
The Energy Minister, OPEC and non-OPEC cuts will not end early.
So we have this low here, and then we have this high here. So that little zone is also very important from a dollar yen point of view. It needs to be taken with some conviction in order to potentially open up the way for the retest of this additional upsides towards here. This is your 61.8 fib retracement from the swing low to the swing high, and it needs to clear it, break out, and gradually move up here. Then you have your 200 period moving average. You have a falling resistance trend line that we talked about in 4 hourly, in hourly time frame, and then you have a daily up here as well. So your intraday price is breaking out. It's breaking out there as well. Guys, lovely talking to you all. Lovely talking to you all. I can carry on talking to you about markets for the rest of the afternoon, and that's what I'll probably go and do on TraderCast. But thank you very much for watching and listening. Let me just see if I can go back to the disclaimer. Anything that we talk about here is our opinions and experience, is not advice, but hopefully this was educational as well, and you found this useful as well. The last thing that I want to show you, just to remind you guys, there's a big event going on. Over the weekend, Saturday and Sunday. I'll be there all day Saturday and on Sunday as well. Go to FxPro, register. You're more than welcome to come and join us, and it will be lovely to meet some of you in person as well. Thank you for watching. Thank you for listening. Stay safe and happy trading. And I'll talk to you soon. Talk to you next week on Wednesday again. If not sooner. Thanks. Bye. Bye for now.